are we? What does this action tell us about whether we've hit a bottom or not? Or is this a process that's going to take more time?
It's absolutely a process that's going to take more time. This process began on January 17th. On January 17th, the U.S. 10-year was 184. U.S. 10-year fell to January 31st to 1.50. The market at that point, Scott, was telling us something. It was telling us exactly where we are right now. Now, I understand
95 basis points.
Right. And when I left on February 12th, the U.S. 10-year was 1.63. So we are going to take the lead from where the U.S. 10-year goes. You need to see the correlation between a lower yield and lower stock prices begin to break down. I think what's incredibly relevant at this point is the actions of the Federal Reserve and what they did by giving a 50 basis point cut is basically not to be interpreted as they're trying to stimulate economic activity. Actually, if you look at the circumstances surrounding the coronavirus, consumer behavior has to actually contract and retrench for there to be a containment of the coronavirus. So the economic activity argument doesn't fly. What actually flies in this is it's about leverage, and it's about liquidity, and it's about risk aversion. For some reason, market participants since the middle of February have had an irrational exuberance for safety, and they are fleeing away from risk aversion into the safety of treasuries. What the Federal Reserve rightfully did yesterday was begin the process of trying to discourage that type of behavior and get people to take risk again.
You want to talk about taking risk, whether now is the right time to take risk? That's what we asked Guggenheim's Scott Minerd yesterday. Here is what he told us.
At this stage of the game, I would say we have more downside risk, and the expression "dead cat bounce." That's what I think it feels like. Equity valuations continue to remain relatively high, and I think trying to use an earnings model at this stage is a little bit difficult because rate cuts aren't going to salvage future earnings right now. So we need to find out where the bottom is here, and until we have something that firmly tells us where it is, I think we should just wait.
Okay, let's react to that, Weiss. Should we just continue to wait for a bottom?
I think so. I think we're going to see the market sell off again. For example, while you were talking, LA just reported some more coronavirus cases and declared a state of emergency. Now that we have testing, the numbers are going to really pick up, and in my view, they're going to be stark. So I somewhat equivocate between going longer. I did buy some lows. I did add to just a couple other things because there's nothing good about the virus in terms of what it's done to people or what's done to the economy. But seeing what's happened in China, we can sort of time frame it if we can believe their data into how long it's going to take to come back for the virus to start dissipating in terms of new cases. However, I still think the headlines are going to be very powerful, and we had only 500 tests up till Friday total in this country. Now we're getting at 1,000 a day, work up to 10,000 a day. The numbers are going to be frightening. Well, so I don't think you sell here because as I look out a year, I'm very excited about the market. But in terms of Scott's call about valuation, I agree. The market expanded on multiple expansion based upon earnings supposedly growing in 2020.